In this video, I'm going to let you know about SPACs if they're worth your money and your attention. Welcome back to the Handa Show. On this channel, my emphasis is to demystify finance in simple language without the use of any jargon. Since I tend to read business news a whole lot, I noticed SPACs were all over the place this year and last year too. So I did a lot of reading on SPACs so I can enlighten myself and you. Alright then, without wasting time, let's get down to what is a SPAC and should you waste your time and your money on it? So usually when a company has to raise capital in public markets, there are three mechanisms with which they can raise some money. Initial public offerings or IPOs, direct listings, and SPACs. SPAC is the new black. The who's who of Wall Street is coming out with a SPAC. US regulators compared to other parts of the world are most lax with SPAC. Hence 99% of the money that has been generated in SPAC this year or historically has been in USA. SPAC is an acronym for Special Purpose Acquisition Company. They are also called blank check companies because you have no control over the money. You don't have any control when you buy anything else anyways, but you don't even know what you're going to buy. So that's why they are called blank check companies. I think it should be called blind leading the blind companies. So these investors that you have been following in the past, I'm hoping you like them, you trust them. So they come out with an IPO process, collect all that money, and then go out looking for a deal. If they can't find a company to buy and make public, usually your money is returned to you within 2 years. But do you think most of the people, once they have raised your money, they will give it back to you if they can't find a good deal? Do you think once Wall Street has your money, they will give the money back to you if they can't find a good target to buy and take public? I don't think so. I think they will buy whatever they can so they can make money. At least most of them will do that. Just what I've told you so far, I don't like the structure of SPACs, but let's see what we have ahead if we get to like something about them. SPACs are not completely general all the time. When a SPAC raises money, sometimes it gives you a broad theme that they might look for companies in the tech space or in the pharma space. Recently, the companies that became public using SPAC that you might have heard of are Virgin Galactic, Nikola anybody, DraftKings. I think you must have heard of these names. So last year in US, 59 SPACs raised money, and this year about 79 have been filed so far. So why do the companies who are acquired by SPACs like them? Because they don't have to go through a lengthy IPO process. They don't have to go through the roadshow. They don't have to meet institutional buyers. The SPAC company has already done that process. They can just go public in 4 to 6 weeks with much less cost to them. As you can see, I'm back in the office, and this is where we do serious stuff, where serious investing happens. So if you look at the historical performance of SPACs, it has been horrible. It has way underperformed the markets. And I'm not very surprised because you don't know much about the company that is going public. It has underwent no scrutiny. The only thing you know about it, the guy who's acquiring it and making it public, is he has your money. The biggest concern I have with SPAC is the SPAC sponsor gets 20% of the float at a steep discount. The promoters of the company get diluted, but they get access to the cash, which I presume they need. This to me seems like a nice quid pro quo at your expense. Me no like it. So what would Handa do? Would Handa invest in a SPAC, or would Handa continue to invest in an index fund? The verdict is Handa would not invest in a SPAC. Handa would continue to invest in an index fund. End of story.